good afternoon, good evening, good morning. It's always a pleasure whenever you guys hang out with us. It's the real estate experience with me, Travon Smith. I know it's been a while, but it's a good reason. Everybody's busy right now trying to take care of our clients and whatnot. Today, I'm excited. We got a guest who's talking about credit, things you can do to help your credit, things that affect your credit, things what you can do to sustain your credit, why it takes so long after you pay your credit card bills, and it takes so long for turnover. But with no further ado, we're talking to Miss Melissa Cedillo.
Yep,
Okay, I said it right. I practice always with last names before I do it. So how you doing, Melissa?
I'm doing good. How are you doing tonight?
I'm doing good. I appreciate you for hanging out with us. I appreciate you for sharing the knowledge, with myself and the people that check in. So if you could just talk, I always do the intro. If you could just tell us how you got involved in doing credit and what makes you, what decide to go down that road.
Well, I decided to get into credit because I myself had basically got out of a bad relationship that totally ruined my credit. So I basically had to start from the bottom up again, and I had to actually go through the process myself. So it just gave me a passion for it because, like a lot of people, I didn't have like the basic understanding. I thought it was kind of more like pay your bills on time, you'll have good
Mhm.
credit, but there's so many other things that factor into it that a lot of people don't know.
Mhm. And that's some things we'll talk about today. Um, for I want to know this question before we start off. Like, I'll pay a credit card off in January. Like, I started working on my credit card situations, and because I have a business partner, which we're trying to get a property this year, and I paid it off in January, and it still seems like it takes forever for the credit card companies to actually do the turnover as far as cards paid off. Do you have an answer for that? Is there a arithmetic, mathematical solution for that?
There actually is. I'm glad you asked that question. So, on our credit card, we have a due date. And then on the top, there's also a date range, which is your statement date, which is basically the period you're getting billed for. So, a good tip is I know everybody wants to think that you have to pay it by the due date, but really you have to pay your balance by the statement date. And there's actually a lot of factors that come into play with that. And typically we're told to keep the utilization at 30% on average, but really 30% is really close to 50%, which is close to maxing out your card. So
Mm,
you don't get the advantages of having that line of credit as much. So what I recommend to my clients is that they keep their utilization below 10%. But if you want good credit, I guess the magic percentage is 3 to 6% of your utilization or of your available credit. And if you want excellent credit, is between 1 and 3%. And so how you do that is by the statement date, whatever your available credit is, you pay it down to between 1 and 6%, and then that's when it's going to report onto your credit within a few days of that statement date. So sometimes people might use their card prematurely, so even though you pay it, you use it, the balance kind of goes back up.
yeah.
So it's important that you wait until after that statement is generated, because that number is what's going to show on your credit report. And that's one of the actually the second biggest factor is your utilization as far as your credit score.
Credit cards, credit is so complicated. We just need to figure out a little formula for it so we all can memorize it. But so I did want to I wanted to ask this before we got into the questions because I know we have some things you want to cover as well. Is it worse to pay off your card than to make payments on it, or is that
Well,
true?
there's a
Or
trick to that too.
what
So,
oh,
ideally, if you pay it down to 0%, it looks like you're not using it. Again, it goes back to that statement date.
mm,
So, it's good to just leave a little time. What you could do is pay it all off if you don't want to pay any interest on the card,
mm,
but then make a very small purchase, like buy a candy bar or some gum,
okay,
and then let that small balance report. And then you could feel free to use the card again and just kind of rinse and repeat the cycle.
okay. All right, well, we're getting here with tips with Miss Melissa, the credit expert right here. We definitely appreciate you for hanging out with us. Now, I know before the show started, we talked about a couple of things. What are some pointers as far as how to rebuild your credit? I believe you want to talk about and things that harm your credit more than usual.
Okay, so some things you could do to build your credit, say if you don't have any, one thing I would recommend is getting a secured credit card with either like a major bank or a credit union. I think that's one of the best ways. There are other cards you could get, but they're like tier two, tier three cards.
Mm.
So credit's all about relationships, just like real estate. So, there we have top tier banks like Bank of America, Chase, American Express, Wells Fargo, and then we have like the credit ones, First Premier, First Progress, which are lower tier cards. And it's kind of like, I guess in high school, like what crowd do you hang out with? Do you hang out with the good kids or the bad
Oh,
kids?
yeah.
So it's all about relationships. And say if you have those lower tier cards, it makes it harder for you to get those big bank cards. So it's best that you start building relationships with your banks and credit unions. And they also have credit builder loans, which is kind of essentially like a savings account. You're committing to pay a certain amount every month, say to equal up to 500. So it could be like a 12-month payment, an 18-month, 24 months. And so that also helps build your credit. And then you get the money back at the end.
Well, hey, there goes your credit tips right there from Melissa. Melissa, where can they reach you at?
At www.jddfinancialconsultants.com.
Okay. www.jdfinancialconsultants.com. If you need more help or you want to ask her about some things she might have spoke upon on the show. I want to circle back to where you were saying some things that harm your credit that people like me may not know. And I might know a couple of them, but like you said some good pointers, so I might not know all of them.
So I would say definitely don't max out your cards. By your statement date, you want to have the balance as low as possible. You are okay to max it out, but you need to make sure when it reports that it's having that low balance and not
Mm.
showing that you're using your whole card or you're over the limit. And another thing is, it's tax time. A lot of people like to pay off their old debts, pay down their credit cards. So a lot of people want to close them when they pay them off, thinking that's going to help them, but it could actually tank your score because it affects the age of your credit. And then also it could lower your utilization because you're losing that available credit line.
See, I wish I would have talked to you before I did this. I was just trying to pay off my credit cards, just, thinking I was doing the right thing, like, most of us. And so I need to leave a little bit of credit on there. So that's good information. Any more things that we shouldn't do?
I would say definitely, you want to keep your accounts open as long as possible. So that's why credit cards are a good way to build your credit as well as line of credits. Because although you do need to have a mix of credit, which would be like loans, mortgages, student loans, personal loans, car loans. Your mix of credits actually accounts for it's 15% of your, I'm sorry, not 15%. It's 30% of your credit score. So
Mhm.
you want to make sure you have a good mix because it shows that you're handling different kinds of accounts responsibly.
Yes, ma'am. Also, you have a variety, so it shows that you're good with your business transactions, correct?
Correct.
I want to go back because you said something about if you pay it off, it affects the timing. Like, so if you pay something off, a credit card off, it like what does that do to the time? I heard you say somebody does something as far as the length of time you've had it. Does that affect it if you pay it off?
No, not if you pay it off, if you
Oh,
close it.
oh,
So
if you
if you
close it,
close it,
okay.
that will affect it. But if you pay it off, it just kind of looks like you're not using it. So then they could either in turn reduce your credit lines or sometimes they close your account if they think that you're not using it. So the more you use it, it's kind of better. But what I tend to tell my clients is to use your credit card like a debit card. Anything you're going to spend on your debit card, use your credit card and then pay it right off. And then not just that, but your credit card provides a lot of more protection than your debit card. So if there's any kind of fraudulent activity, they'll just return your money versus you having to go through the whole dispute process with your bank and where you may or may not get that money back.
If you're just tuning in, it's the real estate experience with me, Travon Smith, talking to Miss Melissa. Melissa, tell them where they can find you at again.
They could find me I'm on Facebook and Instagram, jddfinancialconsultants.com, or they could go on my website, www.jddfinancialconsultants.com.
Okay, definitely. We want people to reach out to you and get as much help as they can. I want to, before we get out of here, I want to talk to you a little about what's your worst situation is. Of course, we don't need to know details or anything like that. What's your biggest issue or biggest problem you had working with a client? You was like, oh my God, one of
I just think it's the social media. Everybody sees TikTok and Instagram thinking that it happens overnight. And really, it's a process. Your credit didn't get bad overnight, it was a process for you to get to that point. And so it does take time to fix it. And it also does take time to rebuild it. So I think really patience is key and just being willing to listen and learn and work together as a team because it is a team effort. What I'm doing won't help you if you don't do your part.
Mhm.
So I think just definitely working together in communication.
Is that the biggest issue? Because it's kind of like real estate, right? The biggest issue is everybody has to meet 50%. Is that the biggest
Right.
issue when you give a client like a certain instructions and it's like, hey, did you take care of this or did you take care of this? Is that some of your biggest issues? Because we have them with real estate,
Definitely.
right? So,
Yeah, because it trickles down. If you don't do your part, then it prevents me or delays me from doing my part.
and then they want to blame you.
Yep, of course, always.
Okay, go ahead. I appreciate you for hanging out with us. It's Miss Melissa. Go ahead and give them the information one more time so everybody knows where they can find you at, and we'll also have all your information posted in the description below.
Awesome. So you guys could find me on social media. I'm on Facebook and Instagram at jddfinancialconsultants.com, or you could also reach me by email info@jddfinancialconsultants.com. And I want to thank you so much for giving me this opportunity to just educate your audience and present my information to you.
Educate my audience and educate me. So I thank you for your time. I appreciate it. And don't go nowhere. We'll be calling you again to hang out with us.
Definitely. Thank you so much. I appreciate it.
All right. Have a good day, Melissa. Thank you again.
Thank you. You as well.